your guy Noel Parnell, and today I want to break down a conversation that's happening at the highest levels of power. It's a fist fight going on right now, and how it directly affects your wallet and your next real estate deal. The disagreement I'm talking about is surrounding President Donald Trump and Jerome Powell, the chairman of the Federal Reserve. But this isn't just about politics. It's about how we manage the value of money in a time when debt, inflation, and interest rates are all front and center. So let's look at both sides of this debate right now. On one side, you have President Trump's position. He's pushing for lower interest rates and really a more aggressive approach to stimulating the economy. So the ideal is really simple. Make borrowing cheaper, encourage spending, investment, boost growth in businesses, jobs, and real estate. Lower rates can help everyday Americans, stimulate the stock market, and make it easier for borrowers, including the federal government, to manage debt. For real estate investors, that could mean better financing terms, easier access to capital, and deals that finally pencil out that weren't working a few months ago, last year, or even yesterday. On the other side, you have to look at Jerome Powell's perspective. He's focused on preserving the value of the dollar and the value of money, and really avoiding another round of runaway inflation. From his standpoint, if we push rates too low, too fast, we risk repeating what happened in the 1970s and 80s, when inflation soared and the Fed had to come and slam on the brakes, and you had extremely high interest rates going way into the 20s to stabilize things. He believes in keeping policy balance, not too loose, not too tight, and responding to the actual data, not just political pressure. So for real estate investors, this can mean staying in higher rate environment longer, which puts pressure on valuations, cap rates, and underwriting assumptions. So, what is the market really saying? We do know stocks they're hitting all-time highs. The dollar is really weak right now compared to gold and Bitcoin. Borrowing is still relatively accessible, but inflation, while lower than last year, is still affecting consumer spending and costs. So we're not in a crisis, but we're not in the clear either. So you're probably saying, well, damn, Noel, what does that mean for real estate? Well, this debate directly affects your interest rates on loans, your ability to refinance or acquire new properties, your capex budget, if inflation pushes costs higher, if your rent assumptions, if consumer budgets get squeezed, if rates drop, buying and refinancing could become more attractive, but it might also drive prices higher again. So if rates stay up, it forces discipline. You'll need to underwrite conservatively and find true value, not hype. So you're like, all right, where do we go now? So here's my final thought. Both sides are trying to solve the same challenge. How do we grow the economy without losing control of inflation? President Trump leans toward fast growth through easy money. Jerome Powell leans towards steady stability through discipline. Look, there's no clear right or wrong choice here. Two different strategies with different risks and rewards. As investors, our job isn't to pick sides, not to play politics. It's to understand the playing field, adapt, and make smart decisions based on where the money is flowing. I'm Noel Parnell, and this is how you think like an investor, not just a buyer.